Good morning, everybody. You are watching SmallCapSteve live. I'm SmallCapSteve. We got a big show today. We got Tim Seymour joining us. I couldn't be more excited to have Tim on. First time we've ever had a guest that my mom actually was excited to hear that we had. Or first person we've probably had on that she's even known who is. So really excited to have Tim. He's a big supporter of cannabis stocks, something we talk about all the time on this show. So buckle up. Let's get started. Tim Seymour, thank you for joining us today.
Great to be here, Steve. How are you?
I'm doing fantastic. So I actually just found out right before we went live here. I didn't even know that you managed a cannabis ETF. We follow the space closely. Jay, did you know that?
I actually did.
Okay.
There's a few ETFs still out there, right?
So let's start with that. Let's start with that. What's the story?
Yeah. So look, I've been investing in cannabis for 5 years. If you've heard me talk about the sector anywhere during that time, I'm an emerging markets guy by background. Cannabis to me fits all the description of new asset class, emerging market. It's on some level, there's a lot of parallels to me living in Russia in the late 90s or investing in Brazil in the mid 90s and Asia. Cannabis is an exciting sector that fits both the top-down consumption stories and obviously bottom up in terms of the growth in the companies. So we launched the ETF in 2019. CMBS is an active strategy. It's intending to not only give investors exposure to the sector as we see it best fit today, but a sector that's moving so quickly. We're trying to also have the portfolio incorporate the names that we think are going to be about tomorrow's trade. And between M&A, between new IPO listings, we've actually been involved in a couple IPOs in the fund over the last 3 months. Between obviously some of the trading dynamics within the sector, even though we're long-term investors and very thematic here, being active works. And cannabis, as you know, and as people that listen to your show and people that have been following the sector, the growth is extraordinary. I mean, who would have thought we'd be here today on the day after New York signs into law a recreational bill on in a period where we've also had really incredible federal legislative news around SAFE Act and obviously, look, we just got through an earnings season with the top 4 or 5 listed U.S. players. And the numbers are staggering in terms of the growth and the year-over-year kind of relative yardsticks, but also just profitability, free cash flow, things that people didn't really think were part of the cannabis sector or would be for the near future. And in fact, it's a very profitable sector, and it's a sector that I think is got a lot going for it.
So I have to ask, what sets CNBS apart? Sorry, Steve, I know I cut you off there.
Well, I think the combination of, look, I'm a portfolio manager. I've managed these types of asset classes for 15 plus years. I think as a guy that's as deep in the sector, I think as almost anybody, like when I'm not in my ETF, I'm part of the investment committee on the largest, I think at least one of the largest hedge funds in the space at JW Asset Management. I'm in the sector. I'm talking to CEOs. I'm involved in the conversation and the thought leadership as it relates to legislation. I'm in touch with all the industry leaders. And again, I'm someone that's managed portfolios. And in emerging and new asset classes. So look, that's what we do at CMBS. It's an active strategy, which means that I don't have to wait for a company to be added to an index to suddenly rebalance my portfolio. If I have stocks that get caught in an uptick in a Reddit wave, I can fade that strength if it doesn't really make any sense. If 2 companies merge, Green Lane's in the portfolio. It's it's a 2% position, but it's a company that I think has been in kind of a restructuring, re-rating mode after some difficult times. Today, they announced a deal with Kushco, which is the largest bottler in the space and a company that I actually used to sit as an advisor to and know that story well. I own these names, and these are the kinds of things that I can do in the portfolio, and I think that's what we've proven we are doing.
So these are mostly Canadian names you hold right now, right? Or non leaf touching or non-plant touching US names. I assume that just based on your commentary there about the recent US earnings, you're sort of getting excited about eventually being able to run a similar ETF in the US, or
Yeah.
will
Yeah.
you start
So,
picking up US names in this fund? What does that look like?
so look, the sector, obviously, I have limitations in the same way that GTI and Curaleaf have in terms of directly being on a U.S. exchange and touching the plant. If you listen to Schumer today, the next phase of this bill means that this may be changing sooner than later. We're in the process of doing some things to the portfolio that I think are going to give us more access, and I think there is an opportunity to own U.S. players either through swap or get exposure through other holdings that actually may have U.S. positioning. We have a big position in Canopy Growth, and obviously one of my, one of the levers here, in addition to just thinking it's a sophisticated consumer products company with a big brother and a big balance sheet, but they've been very actively, not only acreage, but I mean, the TerraSand ownership to me is a very important part of that investment as well. So yeah, look, I think I don't own in the portfolio as freely what I'd like to in the U.S. markets. I think that is changing. Meantime, where it's been, call it GrowGen, call it Hydrofarm, call it IIPR. These are U.S. listed names that I took concentrated positions in. And actually, part of managing a strategy is not just managing the bottom up, but also knowing where the capital flows are going to go. I mean, the same issues that restrict me are the same issues why GrowGen and Hydrofarm have outperformed and have been stocks that have actually done better, arguably, than owning GTI or Curaleaf, which are great companies and companies that I think are going to continue to re-rate. So, that's part of what I do, and part of where I think, again, I encourage investors just to look at performance numbers, look under the hood, look at your ETFs, see what they own, and see how they've done during a period where the U.S. is re-rated. But the ETF that I have, which owns a lot of U.S. and will own more, but I'm not apologetic about it. You just look at the performance. The sector, we're in this for the long haul. And I think cannabis is going to continue to be the growth sector that people expected it to be. But I think with real companies and an evolving story, especially in terms of the sub verticals we can invest in, I expect we'll have more exposure to technology plays and to ERP and logistics and distribution. Everybody talks about brands. I don't really see those brands just yet. But that's part of where we are. But look, the U.S. market is the biggest market in the world, and I'm not gonna mince words on this. As it is in a lot of other consumer products, or really every other product class in the world, the U.S. market's the most important market. And managing this ETF thematically for where the market is both now and where it is in the future is my job, and that's how we're doing it.
So you had mentioned that you're focused on emerging growth, and you have been for decades. What has to happen in cannabis for you to start to move on from this segment as being an emerging growth to just a general market, really? What event do you foresee being required for that?
Well, look, we talked about some of the federal restrictions on the sector. Most importantly, access to capital markets, lowering the cost of capital, giving cannabis growth companies the same multiple that you put on growth sectors in EV or in gaming or in software, means that you're going to see the sector re-rate remarkably even from here, and it's had a pretty good run. So getting access to capital markets and traditional capital forms, removing 280E, which is a restriction on essentially on the tax side, and the ability of these companies from an accounting perspective to deduct normal expenses and so profitability levels. These are some of the things that are exciting. Look, I don't think there's anything we're really waiting for that's pie in the sky here. What we've seen is that the legislation is taking a proper path, and it's moving at a progression that's appropriate for the sector. Meanwhile, the states are the more important story here, and all the states that have come online in the last couple of years, the success stories, whether it's Michigan or Illinois, New Jersey now, we're waiting to see some of those numbers, but the numbers are being delivered. So, for me, I think that's the most important dynamic for investors. And as someone that's invested in growth sectors, the other missing ingredient is institutional capital. So when you can actually lift the gates and allow big institutions, pensions, endowments, or more traditional mutual funds invest. Look, a lot of your investors who are on a traditional online broker or a traditional, call it a wirehouse, online trading platform can't even own cannabis in many cases, and that's even with great enlightened companies that are not living in yesterday's world. So the flow of capital into the sector is the biggest thing, and why I think investors that are in now are well ahead of that curve.
Okay, so Tim, you talk to a lot of people in New York. You're obviously on a national show that many people watch. You get to have conversations with fund managers, financial media, you name it. How much has the conversation changed over the last, say, since Biden got elected, or even leading up to that, in terms of that institutional capital starting to get a little bit more comfortable investing in some of the U.S. names?
The conversation is, first of all, about the ones that are already in the sector. The conversation for them is these are growth multiples I can't get anywhere else, and this is profitability and free cash flow generation that I now see. And that wasn't the story in 2018, right? So that's the conversation, is that this isn't a pie in the sky, and these aren't companies that are on a path of unlimited growth at irresponsible capital allocation, which is what has gone on in this sector in the past. Cannabis 1.0 was a dream. You were valuing companies on asset-based multiples, which makes no sense. As a guy that's invested in commodities over the years, especially in places like Russia and Brazil, and spent a lot of time, even I would argue, even in those sectors, that was ridiculous. So the sophistication, the growing up of the sector around companies that are actually doing their job, and think about it. Think about cannabis companies that have had to face the conditions that are prevailing in capital markets and in the industry and in the world, and on the regulatory and on the compliance level, and as they roll out their businesses. Think about how successful those successful companies will be when those headwinds are removed. So you've had, you name the companies, we all kind of know who they are, that have done really well through this period. That's a true sign of management. So we're, an execution and the opportunity and the top line growth. So, where are we in this trade? And again, I think the conversation for investors is not that this is, Cannabis 1.0. Oh, what a great idea. But this is Cannabis 3.0. This is building brands. This is sophisticated management teams. This is profitability. This is investments into logistics, ERP. These are companies, some are focusing more on wholesale, some are focusing more on retail, some are focusing more truly on marketing and brand building. But that's the conversation. That's where we are.
Okay, so let's talk about. I'm more fascinated by the U.S. market, as you said. We're seeing some of these companies, they're putting up like real EBITDA numbers, real revenue numbers, and in Canada, quite frankly, you look around, effectively nobody makes money.
Yep.
So it's a much more exciting opportunity. I know we did an interview before with you with Cassandra, and you were wearing a Gauge hat. I'm curious which U.S. cannabis operators you like, and what sort of the criteria that meets your checklist looks like.
Well, look, I love the story of Gauge. They're in the process of doing a finally listing up in Canada, and this is a Michigan-based operator, vertically integrated. They have spent a lot of time figuring out how to grow very successfully, high quality, and very efficiently. And then they added on new capacity in the last 12 months that came on towards the end of last year. And they're adding another phase to that, so that they, in a state, people understand about Michigan. One of the issues in Michigan has been there's just been a lack of good product. This is a company that also has great relationships with growers in the periphery that have been able to be contract growers for Gauge. This is a company that's developing brands. I think they've spent as much brand development as any company. They've got a relationship also with Cookies, which is arguably one of the leading brands in the country at this point, and has separated themselves from the pack. So that's the kind of a story that we like. And on the hedge fund side, at JW Asset, this is a company we've known for a long time, and if anything, we've added to the investment as we think the story is better. And then, look, talking about, the numbers that we've seen in the last round of earnings, I think, first of all, the bar was set very high. But when you look at the free cash flow generation at Trulieve, for example, this is a company that's been one of the most profitable companies in the world for a long time, and is now doing it in scale. The operational leverage that's going on there is pretty extraordinary. Then you take a company like QYOU, who, is critical as people have been, and looking back on the, plant flags in the ground anywhere you can, and your multi-state will be a function of just, your physical footprint, and that really didn't work, right, for a lot of folks. But I think it's working for QYOU, and I think it's working in terms of also the kind of the two-pronged brand approach take, and to select and ultimately to where they are with the QYOU brand. And I think actually having that big of is interesting. They made an announcement about an international acquisition, a company they do well.
Can I ask you about that one? Because we saw a lot of that happen in Canada, and I'm gonna call it like I see it. I didn't really like that acquisition, is seeing how Canada played out. It felt like Europe was effectively a conduit for analysts to get to expand the numbers on their spreadsheets to justify all the square footage. And then we see QYOU announce it was like a $300 million acquisition or somewhere around there. And of course, insiders owned a part of that European acquisition that QYOU took out, which as following the space for the last 5 years, something I didn't really like seeing, and I was kind of disappointed to see that aspect to it. What was your take on that transaction?
Well, I'm going to agree with you that I think that all the talk of European GMP export access, it was garbage, and it really, especially when you consider, we all recognize Europe's going to be a big market. It's the EU as an economic bloc is the second largest economic zone in the world. But those announcements that were made 2 years ago, 3 years ago, as if they were defining revenue opportunities even in the medium term, is completely false, and it was misrepresented. And I think investors should hold some of those companies accountable even today. They certainly have with the stock price of a handful of them. So we're totally in agreement on that. I think QYOU is a company that's going to be a global company. That's my point. The transaction is an insider transaction, an arm's length transaction. They have an investment arm. I don't think there's any secret about that, and I don't think there's anything wrong with that. I think investors should judge the merits of that transaction for what it is. I don't think they should be accreting an enormous amount of value, and I don't think QYOU should be penalized based upon the sins of Canadian announcements of 2 year ago. I think you put that announcement in the context of it is a global market. It will happen. It will change. Look, I met Boris Jordan when I lived in Russia in the late 90s. I mean, Boris Jordan has built a couple businesses in the time I've known him, and they've been global businesses and with a lot of access into the EU. That's part of my statement there. I just think that, I have confidence they're going to do what they need to do. And I think Joe Bayern, obviously also at the helm there, has a lot of experience, especially in Europe and with brands. That's what you should take from that transaction, not, oh, wow, that transaction is a defining moment for QYOU.
Yeah. Okay. Let's take a question here. Somebody's asking about New York. Do you follow the politics going on in New York in regards to cannabis, and any thoughts on how you think it might play out?
Yeah, look, the politics in New York are as wild and unruly as they are anywhere, and we've seen that play out in trying to get a rec bill in New York. So we got a signature last night. It's final. We've got some details. The early details, I think, were kind of misunderstood in terms of what it meant for the legacy players. I actually think that there's a social equity component that's obviously very important and one that they can live up to, but it actually puts them in a great position to be executing on an existing retail footprint. What it means for more shops, we'll see. But look, I'm excited by New York. I'm a little surprised that the market hasn't given the New York news a little bit more of a boost. But we're in a period where cannabis overall has had a lot of headwinds, even though the news flow has been extraordinary. So I think let's get a few more details. There's 10 licenses that exist now, a handful of them in the public hands, a handful of them in the private hands. There's obviously a real focus here on social equity components and how the legacy players are going to pay their due share. But really the positioning to grow in areas right outside of New York City right now for the guys and gals that are there is, I think, a really exciting story that's probably at this point not priced in, frankly.
Okay. Jay, you got something?
I actually quite like Bruiser's question there. So I don't know how much you've been following stuff the last 24, 48 hours, but Green Thumb, there were some allegations made by the Chicago Tribune.
From unidentified sources. Unidentified sources.
From unidentified sources. I mean, I know that Ben, CEO, got in front of it on Twitter immediately, and to me, he did a great job. But Bruiser there asked what the role lobbyists play in legalization in the U.S. and everything else there.
What the role? Sorry, the role that what played in
the role of lobbyists in
sure
everything to do with the cannabis sector as a whole, really.
So, look, the lobby group within cannabis is, I don't think, been disproportionate to the voice of the lobby group in other industries that may have a strong view on how they want cannabis to play out, and that's pharma, that's tobacco, that's alcohol. I haven't been in a lot of those sessions. I have a lot of contacts and have a lot of access and talk to a lot of folks that have been in those conversations, and I can't address what the Tribune has said.
Absolutely.
I've spoken to GT. I've spoken to Ben Kovler, not only multiple times, but I spoke to him earlier today. And I think the company is focused on their business as it exists. I think he's made his very clear statement of basically pushback, denying any of these allegations. And I think the politics attached to the sector has always been there. I'm not going to get out there and make a claim on who has been running afoul. There's obviously been corporate governance issues in Canada. There's going to be corporate governance issues in the United States. And obviously the political process of lobby groups has been hotly debated in our country for a long time in a lot of other sectors. And I don't necessarily believe people should be able to pay to play and get access. Does that happen? Probably does. But I'll let this one sort itself out. I think for a lot of investors, this has been a pretty interesting opportunity to buy one of the top companies in the sector a little cheaper.
So that kind of brings up sort of a whole interesting discussion, just bringing up how Ben got active on Twitter when these allegations came out, and just the role of social media when it comes to individual equities and how issuers get out there and they tell their stories. How big of a role do you think that plays, and how big of a responsibility and how much focus should companies put on that in today's marketplace, where we've got the Reddits and the FinTwits and all these different message boards? Do you think that that's something that the companies should be actively managing, or do you think that or come from the line of thought that if they execute, investors will find them?
I don't believe in being terribly promotional, right? And as evidenced by the fact you didn't even know I run an ETF and I'm on CNBC every night talking about cannabis.
And I watch most nights.
I feel about that. All right, I don't let your performance do the talking, and people will ultimately find you. Social media. Look, we've had this conversation on fast money. To what extent? What's the role that's being played here? What's the regulatory response? Has it been accurate? Where's the manipulation in the retail community, in the professional community, and in the corporate community? So social media is a powerful medium. We don't need to there's no proof of concept question there. I think the rules are going to continue to be rewritten on what companies can do. What's Reg FD? Companies that are listed in Canada but not listed here, what can they do differently? What do analysts and investors accept as corporate governance, infractions and violations that should have them discount a company? I don't believe that a CEO that's out there being overly promotional is all that impressive. I think there's a way to tell your story. And I think there's a way to obviously be active on social media and to be to let people know informationally more about what your company's doing, seem like you're approachable. And I think that's the real story here. And apologies, by the way, 12:30 is my daily call for NBC.
Yeah, okay. Well, we appreciate
a quick wrap, and then I got to keep moving, guys. I'm sorry.
No, well, look, we appreciate you taking the time to do this. So we'll let you get to your call, but hopefully you'll come back on in the future. We love talking the U.S. cannabis names.
No, that's great. It's a great conversation in a forum that's obviously has sophisticated, in-depth conversations about cannabis. That's the conversation I want to be involved in. So let's do it again, guys. Thanks for all the work you're doing in the sector. I think people appreciate it.
Thanks for being so generous with your time, Tim, and we'll hopefully have you on in the future.
Gentlemen, thanks a lot. Take care.
Take care.
Perfect. That was fun.
Yeah, that last question there, I was hoping we would have time to ask.
Yeah,
Dark Forest MSO. I think that's a great question.
I lost my thought process here when someone said that I look like.
Yeah,
someone said I look like Steve Baldwin. I think he's referring to.
Yeah, I tried to ask Bruce this question there, and some other comments came in. I was like, oh man, I butchered that. But you know what? We're live, and that's the problem with being live.
Yeah.
So we do have Curt Marvis joining us. I don't think he's in the back end there yet. Is he, Steve-O?
Well, let's. Is our producer Chris around? Chris, are you there? If Curt's coming on, I'm not sure when Curt's coming on, but let's get into some news today. What's going on in the small cap news? What's going on in your life right now, Jay?
So,
you got something to tell us?
As regular viewers, I don't know how many regular viewers we actually have. I'm back today after having my third child late Sunday night, early Monday morning. So yeah, it's been a whirlwind of a week. I am behind on email, so if someone watching has sent me an email, I apologize. Sorry, I'm getting messages literally as I'm saying this. I got tons to get back to. Outside of that, personal developments. I want to give a shout out to actually Willow Biosciences. Client, whatever. I really don't care, but what I care about is they have commercialized a fermented cannabinoid. I think that is huge. I've seen conversations all across Twitter wherein people are saying that they didn't think it was going to happen.
Did you cover it this morning?
Of course I covered it. That was huge news. I think they had it out at like 6 a.m. this morning.
Okay. There we go. Here we go.
So our daily dive today, we actually have two. For Willow, they will be out at 12:30 your time. But yeah, they've completed their first commercial scale fermentation of cannabigerol or CBG. CBG is a hell of a lot easier to say.
Cannabigerol.
Yeah, I've butchered it so many times I don't even know what way is right anymore. Regardless, this is the first commercial scale fermentation of a cannabinoid that I know of, and I'm fairly certain it's one of the first ever, especially on a commercial scale, not just a pilot scale. People weren't expecting this to happen for a few years yet. And that's not talking specifically the Willow. They were sector-wide. They were not expecting this to happen for a few years. I know I was reading a Twitter thread probably last week where people were still saying it's 3 years out. So for Willow to actually do this, I think that's outstanding. Hats off to them. CBG is so hard to get by itself because it's like the mother cannabinoid that then converts into all these other cannabinoids. So being able to produce this in commercial scale, it's great for the wellness sector as a whole. CPG is just, I think it'll be outstanding what we see this company do.
Yeah, well, I've got an announcement to make. I bought my first vape pen the other day. I was on a call last night and I didn't realize, like, I thought this vape pen was out of gas, but I was like, maybe I'll try it. And I didn't have my camera turned on the Zoom call. And then when I turned it back on, it was just like the room was full of smoke. And I was
just
like,
a cloud.
This is so unprofessional.
Well, I was not on that call. I think I know what call it was because we were talking earlier.
But
I'm still getting caught up. I don't even know what's happened the last few days.
What really excites me about Willow Biosciences is this THCV component, which is known as the cannabinoid that suppresses appetite. And I think that will be a real game changer if they are able to sort of create this isolate of it. I think that's going to be massive news. If they could get that stock on the NASDAQ and announce that they could commercially produce THCV at commercial scale, that stock's going to go wild on that news. People go, okay, I get stoned and I am not hungry. That product could be gigantic. I don't know that there's been really any real great research proving it, but if it is true, and look, Gorenstein over at Kronos, he ran around the street telling everybody that they'd be first. Ginkgo's would be first to market with THCV, and I think in large part that's part of the reason that they got that gigantic investment from Altria was talking.
Which has failed. Let's call a spade. They have failed based on the excitement they had 3 years ago. Everything I've read, they've very little progress from everything I've read. So to me, it goes to show that you can have all the money in the world and it doesn't mean diddly if you don't have the right people.
Doesn't mean diddly. He's breaking out the Saskatchewan terms. Doesn't mean diddly.
But yeah, THCV, I just think of all of the opportunities in the edible space, the infused space, whatever you want to call it. Is a company going to want to use a consistent product in terms of purity and everything else time and time again? Or do they want to go the more classic extract, which is, sure, you can say it's full spectrum, but it's a range of purity. You got your high quality, your low quality. How about just a consistent quality? Right?
Well, what excites me about THCV is that maybe this could make me go from looking like Stephen Baldwin to Alec Baldwin. Am I right? I don't know. That comment just got me. So what else is going on in the news?
What else is going on? That was a big story this morning. There was some news from QYOU Media, but we're supposed to have Curt on in 5 minutes, so I'm just going to hold off on that.
Scotty Patterson this morning. I was lying in bed watching CNBC, and I got a call from Parstar Capital. Showed up on my phone. Scott Patterson. So there's Curt. Curt, can you hear us?
I can hear you. Can you hear me?
Yep, we can. This is exciting. I was just telling the story of I got a call from chairman of Q. First off, is it QYOU Media?
I'm going to tell the story right now. It'll take 30 seconds. When we started this company, it was about queuing up the best YouTube videos. We're going to queue up for you the best YouTube videos. QYOU. We thought stupidly that people would run the letters together and just announce it as Q, as one word. QYOU would be pronounced as Q. No one in history has ever called us Q except for us. Except for us. Everybody says QYOU, so that's why it's so confusing. There you go.
We've actually debated back and forth, me and Steve, for literally, we've worked with you for what, 2 years? That entire time we've debated back and forth.
Yeah, I'd actually yell at Jay about it. I'd be like, they call it Q, man. They call it Q Media. Stop calling it QYOU.
Well, in India, we've trademarked and changed the brand to the Q, just the letter Q. So our India brand is the Q. We always called ourselves the Q. That's what we always said. It also came, not to digress, but it also came from the old radio call station things of QYOU. In the United States, a radio station has 4 letters for its, like K-Rock, KROC. So KROC they call K-Rock or whatever, or Z100 or whatever it is. So a radio station has 4 call letters and then they just call themselves. So we were like, QYOU, the big Q. That was the mindset.
So Curt, let's get right into it. The news this morning. I say, and I got a call from Scott this morning, and he actually walked me through the news. But let's hear it. What's the big announcement?
Well, look, I think you you guys, certainly a lot of your listeners, a lot of your, sort of base of people that you communicate with who are, I'll say 35 years of age or younger, are what are known as cord cutters or cord nevers. They're people that aren't signing up in Canada for Rogers or Shaw or Bell Fiber or whatever. If they get in Bell Fiber, they're just getting the broadband service. And all they're using that for is to connect into their television set to get Netflix and Disney Plus and Amazon Prime and whatever, plus all the different TV channels that are offered now for free into those smart TV, connected TV platforms. That's become a huge business in the United States. Half of the viewership that's happening is happening on these connected TV platforms, and it just keeps growing and growing because people are getting it for free. They've got their broadband thing, and young people, millennials, Gen Z, et cetera, they don't want to pay, $100 a month or $120 a month for their cable packages. And they're satisfied with that. So that's a phenomenon that's been happening around the world, and it's been happening more in North America and Europe. It's starting to happen in India as well. As broadband connectivity happens, as fiber connectivity rolls out, connected TVs have become much more popular and are growing very, very rapidly. And Samsung is the leader in India. I think they're the leader in the world, actually, but they're certainly the leader in India in the connected TV space. And so what does that mean? Well, that means that Q is offered on a free basis. Okay, we're a free television ad-supported network. There's only a certain number of those in India. The way the India TV business works is that if you're MTV India and you're on Shaw or Rogers of India, you're getting paid X numbers of rupees per month for every subscriber that they have. So if they have 10 million subscribers, you're getting paid 4 rupees. So you're getting 40 million rupees a month from the Rogers of India for that distribution. Well, that's been there for ages. And the companies that have a lot of distribution that reach 100 million people, well, they're getting 400 million rupees a month. They don't want to walk away from that. That's a big decision for them to say, we're going to walk away from that sub fee that they're getting. We came into the market differently. We came in and said, no, we're going to be a free channel. And there are free channels in India. There's about 60 or 70 of them. And we are a free channel, which means we don't get a subscriber fee. We're all ad supported. We did that because we believe that our customer base, our audience, wants it for free because younger audiences don't want to pay for this stuff. And the whole idea behind what we have as a brand is to be everywhere, across television, across OTT, across mobile, across connected TVs for free. It's the reason we're launching tomorrow on Free Dish. It's called Doordarshan Free Dish. It's the largest single distribution platform for television in India. When we announced it a few weeks ago, we said 38 million. They just announced 3 days ago, they're now at 40 million households that they reach. So we'll reach 40 million households on a free basis. Samsung with Samsung TV Plus. We will reach into these connected TVs as they proliferate across India on a free basis. But maybe most and more importantly than that is Samsung is launching the Samsung TV Plus platform and all the channels onto Galaxy handsets. So Samsung Galaxy handsets, I was trying to look yesterday at some of the data. I think they've got about 140 to 150 million smartphones in India. And I think probably about a third of those are smartphones that will get Samsung TV Plus. So that's going to add a huge number of mobile users that we can address with this as well. So it's a combination of the connected TV platform combined with the mobile capabilities, combined with our unique situation of being free that combines into why this is important. And the final thing I'll say is you got to realize there's 650 million people in India under 25 years of age or under. Okay, that's why what we're building there is so important right now. It's a massive audience, and it's only getting larger and larger in terms of their consumption of this stuff.
Okay, so lots going on there. Here's this is sort of a side conversation from the news, but just something I was thinking about is you guys are building like quite a back office in India. And I know that this is probably an annoying question after you guys have focused your strategy on India, but at some point with, you being able to access cheaper talent and cheaper labor in India, does the idea of maybe entering other markets again with this back office that you've created start to make sense?
Yeah, I mean, as you know, Steve, because you've known about us for a while. I mean, you've heard me say probably 50 times, we went 10 miles wide and 2 inches deep, and now we're going 2 inches wide and 10 miles deep. The broad strategy started, we were in 35 countries with an English language channel at one point. It just wasn't working for all sorts of different reasons. Mm-hmm. And so we focused on India because the opportunity there is so massive. The first, and the other thing I'll say with respect to what you just mentioned is the broadcast environment and reaching all of these people on all these different platforms in a very cost-effective way that ultimately can get into transactional and interactive and gamified content, which is where ultimately this is all going. That's not trivial. And so to answer your question, yeah, we're building a huge amount of technical infrastructure and capability at very low cost, leveraging modern technology that's going to be advantageous to us. The first step is to build out more of what I call Q India networks. So imagine us creating some additional vertical channels. If you look at our current channel and say it's broad-based across a bunch of content categories, imagine us launching a channel that's just a food channel, a channel that's just a makeup and fashion channel, a channel that's just a esports and gaming channel. So that's the first thing we're looking at, along with what are called vernacular channels in different languages. And so, in my mind, 5 years from now, I want to have Q India networks, have 10 channels that we're running, utilizing all that infrastructure. But yeah, absolutely. And success and profitability and brand identity. Look, Southeast Asia, South Asia, Indonesia, Thailand, Philippines, Vietnam, these are massive markets with huge potential. So it's out there, but it's not something I spend a lot of time thinking about right now.
Yeah. Okay. So what's next? Like, what's the focus now? You guys are obviously, you've grown the distribution. I think last time we spoke, you said that you were hiring quite a bit. What's sort of the focus heading into the second half of heading into Q2 of the year? What's sort of the upcoming catalysts that we can look forward to or see management working towards?
Yeah, I mean, our fiscal year ends June 30, but I'm going to talk about calendar 2021 as opposed to fiscal. Q2 is all about really one thing, driving ratings growth. And that's going to leverage the distribution deals that we've already announced, and I hope we announce more, in the not too distant future. And why is that important? We need to get on a similar distribution footing in the television space that the youth brands that we've been chasing are on. That includes MTV India, that includes a Disney-owned channel called Bindos, that includes a Times of India channel. Times of India just invested money into our company, but Times of India has a channel called Zoom that we're chasing. These are, three of the largest media companies in the world and the largest media companies in India specifically with Times of India Group, and they all run youth-oriented channels. We aspire towards catching and ultimately passing those channels in terms of television ratings, which then translates into revenue, which then translates into brand identity. So the number one agenda in Q2 of 2021 is for us to catch up and maybe, fingers crossed, be able to bypass those other youth channels in terms of their television ratings. Why is television so important to us? It's great for brand building, and it's also where the revenues just remain in India, up to 10 times higher on a cost per thousand basis, a CPM. So 1,000 people watch you on a digital platform and you get a rupee, and 1,000 people watch you on a TV platform, you get 10 rupees. And so that's why TV's become so critical for us in the early going, because TV's also super relevant still in India as a platform. So that's the objective. Drive our ratings increase and let that ratings increase drive ad sales and revenues. When are we going to see that really lift? we're going to see it in Q3 and Q4. Because if we succeed in driving GRP, gross rating point numbers, then it's not automatic, but in some ways it's automatic. It immediately starts to drive the revenue. So that's really what we're focused on right now. I mean, we kind of have distribution under control, and there's always there's always an ongoing effort around programming and making our shows, better and better and more popular.
So in terms of distribution, I know you guys have a large following on not just television, but on OTT platforms, as well as the digital. How does that distribution compare to your peers?
In some ways, I would say it's equal, and in other ways better. Where it's better is these are channels that have carriage fees and restrictions of what they can do with distribution, et cetera. Some of them put their content up on a VOD platform on some of these. And also some of these big media companies are very competitive. So they'll have a platform like Z. We're on what's called Z5. Well, Z is directly competitive with Viacom, Sony, and Disney in India. So they're not going to carry those channels onto that platform, whereas we're viewed as an independent. So we have an advantage there. I think the other thing is that the problem in the digital and mobile space, still from an ad revenue perspective, and it's starting to change and it's starting to happen, is that there still is lousy, and you wouldn't think this was the case, but there's still lousy data that agencies, brands, and advertisers are accepting as the data that they're monetizing against. That's beginning to change. I mean, YouTube obviously has created a lot more sophistication around that everywhere, including India, and we're continuing to see that pivot. But the 2021 for us is going to be driven by television ad revenue. That's really where the bulk of our revenue, 80+% of it, will come from this year.
You guys haven't put out any guidance or anything in terms of where okay.
No, we haven't, but I do think, Steve, that I hope that as a result of what I hope will be some consistent ratings numbers at certain levels going forward, that as we get into Q3 and Q4, I'm hoping that we're going to be able to start to, if it's not dead on specific guidance, it will be more announcements for shareholders where they see what's happening on a pure revenue basis.
Okay, got it. So it's something I find kind of interesting is like you see like what we have going on here. I'm starting to look like I'm like in a TV studio or something like that. Right? I owe it all to our producer Chris, who I'm sure was harassing you all morning to come on, and Ed, quite frankly, got us Tim Seymour on before you, which
awesome.
Two giant guests today. But what I find interesting about it is you sort of see like what we've built up here with not a ton of capital and just sort of the way that technology is evolving. I feel like there's been some big leaps and bounds made in terms of like video tech over the last, let's say 2 or 3 years. Certainly it's a lot of it's happened after you guys even went public. Are you guys finding it easier to find talent in India now? And how challenging is it to pick out which influencers you actually want to back?
I think it's just so diversified now. I mean, as I was saying at the very beginning, QYOU, we queue up YouTube videos for you. Well, that's when we started this whole idea, over 6 years ago. YouTube was still the dominant platform with short form video content and so-called, YouTubers. I don't even think they were called influencers 6 years ago. They were called creators at that point. You were a YouTube creator. And now you've got, Facebook, obviously, Instagram, Snapchat, TikTok, and others that are out there. So you've got so much content that's being created through so many different platforms now. And obviously some people cross all of the above. But I think, look, the business that we haven't spent a lot of time talking about with you or with our shareholders is our influencer marketing business here in LA. That's also, expecting to have significant growth this year. I mean, we've got some really, really exciting stuff that's happening for the upcoming Q2 right now on our US influencer marketing business. That's also bleeding over to our influencer marketing business that we're growing in India. So, I actually have a call with a company tomorrow, that they've kind of rebranded themselves where, they're an influencer marketing business and everybody's an influencer. You're an influencer. Anybody who's on the air is an influencer. And so we're big believers that whether it's Q India being an influencer driven content asset and content repository, if you will, or if it's the US business that's doing direct influencer marketing for other people's brands, we're big believers that the influencer economy, if you will, and that whole industry and business is going to go nowhere but up over the next decade.
Yeah, that's certainly feeling that way. We had Rick Rule on, and he's talking about how media is becoming so decentralized these days that it's really just sort of changing the game of how the media landscape works. So it seems like you guys are sort of in that right arena for however everything's going to play out.
Yeah, everybody forgets that when YouTube started, their original slogan was broadcast yourself. That was the original YouTube tagline. And, that was in 2006. So whatever, 15 years ago. Well, I always say this shit takes a lot longer to happen than people ever expected to, including me. And, it just takes time for all this for the advertisers to get on board and the creators to get on board, et cetera. We're in an age now where, my teenage daughters, I mean, their world revolves around the creators and influencers that populate all these short form video platforms.
Yeah, so it's changed so much. I mean, look at this. Somebody said that I look like a Baldwin brother today, and we can interact with them, and thanks to how media has been decentralized. I like to say that the Baldwin brothers actually look more like SmallCapSteve than the other.
Yeah, there you go.
There we go.
There's already enough Baldwin brothers anyway. They don't need any more.
I assume that he's referring to Stephen Baldwin for some reason.
Yes, I would hope so.
Well, Curt, thanks so much for coming on here and giving us more color on the news. Really excited with how everything's turned here. I've been honest and upfront with you that there was a point there where I was like, I don't know if this is going to happen.
Totally.
But you guys have executed, and I'm really excited to see how this is going to play out over the next year or so.
Yeah, thanks for having me on. Yeah, it's everybody, who's been watching us, yourself included. This next quarter coming up is going to be a super exciting one for us. So stay tuned on all that.
Okay. Awesome.
Cool. All right. Thanks, guys.
Thanks.
All
right. So Jay, let's wrap it up here. What's going on the dive this afternoon? I think you actually have more Q content, don't you?
I've got more Q content. So right away here, we've got Will Biosciences going out in the next half hour. Then I've got some macro stuff. I'm really behind on my macro stuff. And then we've got Curt back on. It is a pre-recorded Daily Dive episode. I think we filmed yesterday, correct? Maybe the day before. It was this week. Regardless, Curt goes into some more detail on the news that they announced today. I don't know what that is, Steve, but
this is how we're wrapping up shows from now on. So just
what was this? Oh,
look at that! Look at this comment from James. He says, "Hey Jay, where's your baby fat?"
I do want to say a shout out to young Justin for filling in for me the last 2 days, last minute. Thank you very much, Justin, if you're watching. And sorry, guys, if you enjoyed him more than me, let me know, and I'll pass over the reins, I guess. Outside of that, who do we got on tomorrow, Steve?
Tomorrow we got Bruce Linton.
This is way too loud.
The big banger Bruce is coming on. So quick little disclaimer here. Nothing we talk about is designed to be financial advice. If you're looking for that sort of thing, you want to go find somebody who's licensed, not like myself or Jay. Big guest tomorrow, Bruce Linton. I hope you all enjoyed the show. Really, really big for us to have Tim Seymour on. Really proud of that one. Then we got Bruce Linton tomorrow. I gotta tip my hat to our producer Chris, who keeps just filling our schedule with great guests.
The guy's relentless.
That's big. And look at this. Senate Majority Leader Chuck Schumer on decriminalizing marijuana. I support decriminalization at the federal level. and we'll be introducing legislation with a few of my colleagues shortly. Look at that. There's some breaking news.
Breaking as about a half hour ago.
Okay,
He had sent that over while Tim Seymour was on, but we didn't get to it.
Okay.
I'm skeptical at the federal level, guys. I'm going to be honest. It's going to take some time. People thought it'd be instantaneous. It's not going to be instantaneous. There's large implications, especially in the U.S. But
Well, let's wrap her up. Thank you for joining us, guys. You can spend your last hour anywhere in the world, but you chose to spend it with us, and I appreciate that. See you tomorrow.